Alright guys, so in this video I'll be explaining about this trade that I'm about to take. So this is the oil, okay, Brent crude oil. I'm about to take a buy here, guys. I'm about to take a buy for a couple of reasons, okay. So in forex, guys, this thing works like this. In forex there are some positive correlations and negative correlation. For example, here we are looking at a positive correlation of the Canadian dollar and the oil price. So whenever the oil price pushes to the upside, the Canadian dollar is also going to push to the upside. Why? It's because the Canadian dollar as a country, their economy, most of their economy, more than 50% is controlled by the oil. Okay, so whenever you see the oil price going up, the Canadian dollar is also going to follow. Okay, so and also the negative correlation is between the CAD and JPY. So whenever you see the JPY pushing to the upside, you will see the JPY pushing to the downside. Why? It's because the JPY as a country, the Japan is a technological company. I mean, it's a technological country. So whenever they want to produce something, they need oil coming from the Canada. So whenever the CAD is increasing the price of oil, and then a Canadian currency on its own is going to push to the upside, and then these guys, they are going to lose momentum because they need these guys oil. Okay, so that's a negative correlation. So if we are looking at our charts right now, let's look at the CADJPY. CADJPY is bullish. Okay, as I was explaining yesterday, that I'll be buying, and I'm expecting like roughly 200 pips until we reach this zone. So on the other side, the oil price is also rising. That means we are on the right track. And if we come to our correlation numbers here, let's start maybe on the daily time frame. The daily, you can see that the CAD is bullish with +7. That's a big number. And then the JPY is bearish with -4. That is also, that means the market is still going to push to the upside. Okay, then if we jump to the H4 again, you'll see that CAD is still bullish, and then the JPY is still bearish. Okay, so that is also supporting our technical analysis. Okay, so now if we come here to our technical analysis and let's look at the price, the graph of oil. Okay, let's just start on the weekly time frame. We are going to do a top-down analysis here. So I've marked all the key levels that are visible on the weekly, daily, and the H4. So as you can see that the graph is currently pushing to the upside. That means we are only looking for a buy. Okay, then the daily time frame. Okay, let's go back. On the weekly, I'm expecting to see the price going up until this zone, guys, because there is a very strong resistance there. Then once the market gets there, there's a high chance that it's going to reject. Okay, all right, now let's go to the daily. So the daily time frame, we've seen that the market, when the market was here, it was choppy, and then we saw a breakout, then a correction, a breakout, a pullback, a breakout, pullback, a breakout. Now we are expecting the last pullback before we reach this zone. Okay, so that's just a top-down analysis that anyone can do. Okay, then the H4, guys, we've seen the market breaking here and then coming to the 50% zone. This is our fib level from this swing low to this swing high. We've seen that the market is pulling back to the 50%, even the 60% is hit. As you can see, this rejection came to the 61.8%. So that's another confluence that adds more confluence in our technical side and also the sentimental side. Everything is telling us to look for a buy. And now I'm expecting a double confirmation or something like a W pattern like this. Okay, before we buy. Now we've got the first leg. Now I'm expecting the second leg. Maybe it's going to come maybe around the opening of the New York session, because remember, Canadian dollar is pushing nicely during those times, during the New York session. Okay, so I'll be just waiting for a double confirmation, maybe a rejection, then I'll enter somewhere around here, because that is going to be our lowest point of the day. And I remember yesterday we saw the high, and then this was the low, and then the market is still pushing. That means the market is getting exhausted. At some point, the market is going to shift to the upside. Then let's look at our TPs and stop losses. So if the market can make a nice W like this, then my entry point is going to be here, and then my stop loss is going to be below that rejection, and then first TP is going to be the previous high, which is this one here. Let me draw it, which is this one here, and then my second TP is going to be at the weekly resistance, that is going to be a 2.2 arc. Okay, okay guys, I'm out. Cheers.